and gentlemen, welcome to another episode of the Inevitable Podcast. Today I have the honor of being here with Brian Requarth, someone that I've known for, I don't know, 8, 9 years at this point.
Yeah, about that, and coming on a decade.
Almost coming on a decade. And, for those who don't know, Brian today runs a company called Latitude that is I mean, I'll let you describe it for sure, but it's a combination of high quality community management for LATAM founders combined with capital and a bunch of other things that give leverage to founders through software. Is
I
that
should be able to pitch it really clearly at this point, but we're like any early stage startup, you're in constant evolution. So, yeah, I mean, we work with founders. We help them in the kind of pre-seed early days with, it's kind of almost like an education / community piece, which is a 6-week equity-free program all across LATAM. And then we also have a bunch of software products we're building to reduce friction for those founders. And then on the side, we've got a little rolling fund that's backed by some of the top founders and GPs globally. So that's kind of what we're doing. We're making it up as we go, though.
That's great. Well, thanks for being here. Before starting Latitude as well, Brian started another company called VivaReal, which merged with Grupo Zap, and then after that was sold for OLX for $642 million. And so welcome to the Inevitable Podcast, Brian. It's great to have you
Thanks,
here.
man. Appreciate it. Great to be here.
So I wanted to get started just on how you grew up. You actually were born in the Bay Area, right? So kind of like it's an inverse move. Usually, folks that sometimes are born there and working tech end up staying there. So, how were your early days as a kid, and what brought you to start a journey in Latin America?
Yeah, I mean, it's ironic, when I ended up landing in Latin America, everyone's like, "Wait, you're from the Silicon Valley? Like, why are you here? Like, this is," which people don't ask that anymore because LATAM is kind of on fire. But yeah, I mean, I grew up in a pretty kind of stable household in a small town in Northern California, and definitely my interest for traveling. I got to see the world as a kid. My parents were, kind of avid travelers and took us to exotic places. And so it's probably their fault that I, fell in love with this kind of world of, living outside of kind of the Silicon Valley bubble or the Bay Area bubble. And so, yeah, I ended up, I can tell you how I got down to Latin America, but just an adventure. Just got in my car, drove from California to Costa Rica, bought a one-way ticket to Colombia. A lot of times a woman behind these stories. So, went to visit a girl, married the girl, so she imported me to Colombia, and then made my way down to Brazil. My goal was to make it to Patagonia, got down to Sao Paulo eventually, and made that home for 6 years.
That's great. And when was the time that you realized that you were wired differently, that you wanted to be a full-time founder? I there are some stories that we found here about renting a Michael Jordan jacket when in your early
Yeah.
days, or charging rent for a swimming pool during summer.
Yeah. Yeah, I mean, definitely like had that, from day one. I mean, as long as I can remember, I mean, trying to turn things into a business was like something that I always loved to do. I remember, yeah, 5th grade. You're referring to. I had my Michael Jordan, jacket that I got for Christmas, and people liked it, and so I was starting to, just give it to kids at recess. So, just kind of always on the hustle and trying to make things happen. So I think that I'm definitely like a confluence of my parents. My dad was an entrepreneur, had a small kind of paving company in my hometown, but he, kind of built that up and, was, successful there. And then my mom, she, I kind of combine her. She's kind of a social worker. So I look at kind of compassionate capitalism as the intersection of, a bit of philanthropy, a little, community service, and then just, hardcore entrepreneurship is kind of where I like to sit.
Great. And you also you dropped out of college and then you came back, right? How was
I
that
did.
decision?
Yeah, I dropped out of college. I wasn't a great student. I never really was a great student. I left I studied at San Diego State University, and I basically into my second year, I just wasn't really feeling it, and I wanted to go work. So I worked at an internet company that was building software and websites for real estate companies, and I was the youngest person in the company. I was 19 at the time, and it wasn't a very, let's say, prestigious job. I was kind of on the phones and cold calling the East Coast, and all my friends were out partying, and I was getting up at 5:30, 6 in the morning to make cold calls, which I did for a while. I learned a lot. I think it was a super valuable experience because I learned a lot about rejection and communication, and so that was But quickly, I would say 5-6 months in, I'm like, what the heck am I doing? This is I should go back. My parents cut me off financially. They're like, okay, if you're going to be out of school, then you can pay your rent and you can pay your way. And so I kind of came back and I finished out, but I decided to just focus on something I liked, which was Spanish. So I majored in Spanish literature and Spanish language, and then threw in a minor in Portuguese because I had gone to Rio and thought it was amazing, and so wanted to also learn the language. So I guess everyone thought I was going to be a Spanish teacher when I was in college, and I ended up using it in different capacities.
Perfect. And when you were in Colombia, because you were in business with Thomas, right? Thomas Florek, and in the early days. So what was that like when you said, "All right, I love this woman. I want to stay in LATAM, and maybe I'm gonna start working with the internet." I think that you've had multiple different iterations, right, of businesses and things that you were doing before coming to Brazil to do Viva, right?
That's right. Yeah. When I was in Colombia, well, first of all, I wasn't one of these kind of people that came through business school and was like, I'm going to go down to see a market opportunity, and I'm going to there's the internet is growing. It was really a function of I got an apartment. It costs $300 a month. I got to eat 3 square meals a day, and I arrived with a few $1,000s in my bank account. So that kind of entrepreneurial setting was no one would hire me. Why would they hire somebody? I studied Spanish. They got plenty of Spanish speakers in Colombia. So I ended up, I ended up, I ended up going to a trade show. I went to a book trade show, and where there was all these books on display. It was a Feria de Libros, as they called it in Spanish. And I bought a business book. It was business English for executives. And I just bought this book. I made a bunch of photocopies of it and turned it into a curriculum. And I walked the streets of Bogota knocking on doors trying to sell my English classes, which was super demoralizing and very, very hard. But I had I stuck to it, and I had a break. I kind of weaseled my way into an office building on the main thoroughfare in Bogota, and kind of snuck by the security because there's high security in these buildings, and kind of played the gringo role of I don't speak Spanish, and they kind of let me go, and I stopped at every floor in this building. I got rejected a bunch of times, but finally, I ran into a stock brokerage and met the head of HR in the lobby, and she's like, "What are you doing here?" I was like, "Oh, actually, I got these English classes." And she's like, "Oh, we're looking for an English teacher." And so I was like, "Perfect, English without borders." I had my whole little, my little curriculum for business English, and I basically set up a time. I pitched the execs at the stock brokerage, and they brought me in, and then I was like, "Oh crap, how do I teach? I know how to speak English, but I don't know how to teach it." And so I did the first couple classes, and then I found a teacher who was more qualified. And I did that for the first 18 months living in Colombia. It paid the bills and it enabled me to kind of pursue other opportunities. And bringing back to Thomas into the picture, I ended up having a student at the stock brokerage. One of the executives wanted to learn German. And early on in my days in Colombia, I had overstayed my visa because I had a lot of time, and I was basically an illegal immigrant, if you will, in Colombia. And when I was in line, ready to pay the fine at immigration, I saw this guy with a German passport, and one of the students that I had wanted to learn German, and so I saw his passport, and I said, "Hey, do you by chance want to teach some German classes?" And he was also kind of a backpacker, and he wanted to make some money, and so he's like, "Sure, why not?" And then we ended up having coffee like the next day, and it turns out we were both had this entrepreneurial mentality, and he had a little bit of tech background, and so we ended up putting our heads together, and we started kind of a website design company, because that was the only thing we could think of that would make sense in 2005. And we did that for a couple of years, and eventually that evolved into building real estate websites, and then eventually we saw a marketplace opportunity instead of just building random websites for agents.
Wow, incredible. That's just the how. Where do you think you get your self reliance? This fortitude to like just basically not give up, because I find that to this date I still tackle into that same energy, even if it's you know to go over every floor and go your way in, or build something that you're building right now. um, how do you channel your energy towards that?
It's a great question, and I wish I had like a very eloquent answer for it, but it's something that I feel is innate, and it's just like I think I've always been highly motivated after certain things. Like when I'm useless when I'm just not excited about something. Like I'm useless. I like I, I was never a good student because I just was like I don't really see the point, or I was always kind of like, what's the applicable, how do I make this applicable to my future life? And I guess that the kind of that self reliance is just, I don't know. I've always been kind of hungry, like always like been motivated, and passionate about, like I'm very passionate about things that once I kind of set my mind. Um, but I don't know. I mean, maybe it's a bit of a mix of like stuff I've learned from watching my parents. But I don't know. I don't have a good answer, man. To be honest, like I wish I had some kind of like very clear. Maybe I need to do some introspection there. Maybe I need to do some some, because it's a fountain, right? And if you can kind of drink from that fire hose, and figure out how to make that, and replicate that. I mean, right now, I find that my personality is that when I grab on latch onto something, then I'll just like go super hard on it, and I just high intensity with everything I do. If I'm playing, ping pong, I'm fucking all out. Like I'm diving for shots, right? And so it's just like it doesn't matter what it is. I just like to go hard, and that can be good, but it also can present some tunnel vision sometimes, because you're just so focused on one thing, and then you miss other things. But yeah, I don't know what it is, but that's just how I roll, man.
Yeah, I think we're very similar in that way. And my answer will be probably a combination of, probably I'm just wired that way, I was born that way, combined with how you are raised. One thing that my mom always said to me every time I would complain, she would say, instead of crying like a little baby, go sell some tissues. And
That's
you know,
nice. That's
yeah,
that's some good tough love right there that probably served you well.
I agree. I definitely agree, because I think in one way or the other, I mean, we're both uh, immigrants that moved to a different country with no connections and no money, and then made something out of ourselves with connections and money, and that continues, right? So that's awesome.
For sure,
The
man.
So how was the move then from Colombia to Brazil? Um, and how did that happen?
Yeah, that was so. There was a aha moment that I had. I can remember it like it was yesterday. Sitting in my apartment, I got my fat laptop, like my HP laptop at the time, this big old machine, because this is a long time ago, and I'm like, I'm clear that there's an opportunity in real estate. Like it just like I had a terrible experience finding property. I got kind of taken advantage of in the process by an agent. There was no central repository for all the data, so I had like zero visibility, and that kind of annoyed me. And I had this language studying Spanish and Portuguese, and so like I knew how to like speak a little Portuguese and write a little Portuguese. And I remember just going to Google. I'm like, it sucks to search for real estate in Colombia. Wonder what it's like in Brazil. And I remember I went to Google and I typed in apartamentos à venda, right? In São Paulo. I think I just like
Yeah.
São Paulo is a big city. Let's just look
Which
for that.
exactly, which is apartments for sale for the ones that
Apartments
don't
for
speak
sale in
English.
São Paulo in Portuguese. I just go to Google, right? And I'm like, and then the results, there's a lot of results. I click on the first link. It's this like flash contorted website that's like it's just a piece of shit website. And I'm like, how is this number one in Google? Like that makes zero sense. And at the time, there was a tool that was called Overture, which was like, it had some
For
data on like
advertising.
search engine volume, right? And back in the day, you could actually see what kind of volume people searched in Yahoo, and and I don't know if Google had that too, but it was a very good proxy for demand. And I remember searching for this, seeing these crappy results, and then going to that tool and seeing that like there's a lot of people searching for this. And so that was like this. I think every entrepreneur has some kind of aha moment, at some point where you're like, and it's a series of things that like, collide, right? And me
Mm-hmm.
having a crappy experience looking for real estate, and then combined with like this aha moment of like, there's massive search volume. This is a huge asset, and there's literally no one building a great solution for this. So like that was just like, okay, maybe I should just go build this website for Brazil and for Colombia. And I started searching all of the major cities in Latin America, and it was the same thing all over the place, right? And so that was kind of the aha moment. And in terms of Brazil, when I started double clicking on the numbers, I remember very distinctly, Diego, one of my partners in Brazil, he sent me a screenshot of a search in Google Maps for a number of real estate companies, and there was like thousands in the state of Rio, just like all these dots everywhere. And when I compared with Colombia, there was more potential customers in Rio than Colombia. So I was like, okay, if I'm going to spend a bunch of energy building this company, we had already launched in multiple markets, but we were resource constraint. And I was like, well, I remembered the phrase from Jack Welch when I read his book, like, years ago, that if you're not number one or number two in a market, you should kind of exit it and you've got to win. And so we ended up kind of, closing shop in Colombia. I had, a handful of people on staff. I remember feeling super bad about like firing people, first time CEO. And ironically, all those people I fired ended up getting jobs at like Facebook and like Mercado Libre and like made way more, higher salaries working at these corporations. And so I ended up, picking up, closing shop in Colombia and just like picking up and dropping into Sao Paulo, just knowing one person there essentially. And yeah, we made that our core market.
Nice. I remember something you told me that day, probably like 7 or 8 years ago. I was asking, I was like, what was the moment where you felt like a VC really made a difference for you? You mentioned when it was when Eric Asher signed, helped like you get a lease for your apartment in Sao Paulo. I don't know if you remember that.
I totally remember that, man. I mean, Eric and Fabio from Monashees, like, man, like I'm sitting here as a foreigner in a country. My wife and I both don't speak very much Portuguese. I mean, 2 semesters at San Diego State Portuguese. That shit doesn't get you very far. And we're like, sitting in a. I mean, I was sleeping in an Airbnb, like crappy Airbnb, like don't know anyone. I don't have a community. I don't know. I don't have any friends. At one point I'm sleeping in Diego's, before the Airbnb in Diego's living room. Like it was just like raw. I didn't have any money. I was just like trying to make it work. And eventually we raised some money from, Kazakh and Monashis. And after they invested, I saw a massive like distraction for me on like, having, we had a baby, which is like, it's not a distraction, but that's a big life event, right? And
Yeah, of course.
like you're trying to get a company off the ground in another country. You don't know anyone. You don't speak the language. You don't know how things work. And I think it was Fabio Eagle that was like, or maybe Eric suggested it, and then Fabio helped me. But literally, the two of those guys connected me with Pachi, which I'm still in contact with her. She was our baba, and she was which is a nanny,
Nanny.
and they helped me get a nanny, and they co-signed on an apartment. It's like that, like those two things, like I mean, and it was smart of them to do that because I like first of all, it's kind of ridiculous that I needed a co-signer for our apartment, and then two, which Quinto later solved, and I thankfully invested in that, and then two, the fact that we had a baby around that time, like man, it's like that's hard, like to manage. So, I mean, unconventional VC, and I'm definitely like hold them in high regard. Not only that, because they also helped me find a handful of executives and helped in other ways, but yeah, that was a game changer for us. And I mean, hard being in another country, as you know, man. Being an immigrant is real, man. You gotta be resourceful. You gotta be looking for opportunities to make things happen, and so it was a struggle.
That's right. Well, in the end, I mean, a few things there. I think that first and foremost, at least I call that funeral alignment. At least, that's how we do it. We say it at Atman, and which is ultimately this ability of self-inflicting with someone, right? And you're both evolving at the same time, and the longer that it goes, the better the relationship gets, and that's kind of awesome in many ways. And so many. Um, I think doing VC with a soul requires a certain type of personality that understands that also unblocking things for founders at the personal level might then generate incredible value on the business side. At least a lot of like what I believe is true happens under those circumstances. This is why for me until this day, you probably told me this 7 8 years ago, but it still resonates because suddenly then you can focus on your company, increases your quality of life, and we don't have enough of a I think of a public conversation about how lonely things are and about mental health and all these things. So because it's hard, right? Like
Yeah,
it's not
man.
easy.
I remember going through a
Uh,
struggle, and like Fabio Eagle, one of the founders of Monashis, he took me out to lunch, and he was the first time someone told me that about the oxygen mask of putting it on yourself before you put it on, other people. And it was like, man, I mean, he didn't come up with the concept, but like he delivered the message to me at the time I needed to hear it. And so it's you got to take care of yourself when you're in the in that struggle.
Absolutely. And what were some of the most, and then how long were you running the business until the exit? And then there was a time where you became executive chairman. So like, how was that entire, ramp up and so forth? And then, there was a moment where you decided to then go back to the U.S., right?
Yeah. So the transition that I had, first of all, I started the company. It all kind of blends together. The start date, I would say, we officially launched the website in April of 29. Like, and we launched a bunch of websites, but no venture backed support. Bootstrap the company. We didn't raise capital for 2 years because not we didn't bootstrap on purpose. We just bootstrap because no one would invest in our business, right? So you hear your founders, "Oh, I'm going to bootstrap." It's like it's some kind of decision, and it is for like some founders, but like for us, we just couldn't access capital. And then so I was running the company from then. We started focusing on VivaReal in 2009, and then in 2016. So I moved to Brazil in 2011, in January 2011. And when I moved, my wife and I, Andrea, had basically I had an agreement with her where we would spend 5 years in Brazil and then we would go back to the US. She really wanted to move back to the US. We were having a family and she just wanted to, just settle down in the US. And so, we got to kind of year 5, and I'm things are going pretty well, but you're in a relationship, and and it's like, thankfully, when you're building your company, it's like the only thing that matters a lot of times, and you get this tunnel vision. When you have kids, that kind of gets flipped upside down, and it's easy to still be obsessed with your company, and you probably will never stop the obsession, but you need to, I needed to step back and be like, okay, what do I want out of my life? And do I want to have a happy family, or do I want to be super rich and unhappy? And so that was like something that I struggled with a little bit, just because I'm super ambitious. Fortunately, I found some balance there, and I remember it was hard to make the decision to move back, but I stepped down as CEO, and I built a transition plan, kind of, and I don't know if I did it the right way. I didn't really involve my board. I kind of just like made the call. Maybe I think
Oh
it was
wow.
fine that we did it, but I basically told my board, I selected the person who was going to take over. They were the VP of, at one point they were the VP of sales. Then Lucas became the COO, and I basically told him, and I spent like 6 months in transition where I didn't tell him that I wanted him to be the CEO, but we would meet every Sunday, and I would in my mind, I'm like, how can I give this person the support they need to become the CEO? And then after 6 months, I told him, I'm like, hey, I want you to become the CEO, and I want to develop a transition plan. Then I ended up flying around, told all my investors. I got a couple different reactions. A few of them were like, hey, I want to sell. A few of them were like, all good, you got to take care of your personal stuff. And so I was already decided. So it wasn't like there wasn't any convincing me otherwise. So made the transition, into end of 2016, kind of pulled the Band-Aid off, and got some good advice from Mickey Malka on how to do that, Julio Vasconcelos, and I basically just disappeared for like a few months, where I went to the Rio Olympics in 2016, and I'm like, Lucas is now the CEO. If you have any issues, talk to him. Like, I'm not solving your problems. Like, he's the person. And it was a good way to kind of just rip the Band-Aid and make a clean cut, and and empower him to be in control. So at that point, I became the executive chairman, and right around that time, I had tried to do a deal with Zap years before, which is owned by Globo, which, for those that don't know, is the largest media company in Latin America. And you know, I remember a call with Mickey Malka. It's one of those things where you know where you are, you know the room, you look around. I can look around and see the room in my office, and he's like, "You should buy Zap." And at the time, this is several years before that, we were probably a tenth of their size in terms of revenue. And I'm like, dude, you're crazy. Why would we go try to buy them? That's just nuts. Like, and I approached them, and I didn't even get a call back when I was like, hey, we want to do a deal with you guys. We're looking at, we'd love to discuss, negotiating. Not even we want to acquire you. We want to do a deal. And basically, a couple years later, we were, totally, gaining, closing, the gap, getting, market share. We called it closing the Zap gap. And we were on this growth path. And I remember they reached out to us. I saw the CEO at a conference. He's like, hey, we're open to having a discussion. But they were like, we're going to, we'd like to discuss acquiring you. And so I went into the meeting with Globo, and I'm like, yeah, we'd like to buy the company. And when you tell a family, that's run a business for 100 years and that owns all media, in the country, that you want to buy their company, that gets kind of it's amusing for people like that. So anyways, we ended up having this one call. I remember the day at my house where we were like, okay, we're going to put our numbers out. Everyone's going to share their numbers. And because we didn't know, we're both private companies. And we're like, okay, Q1, how did you do? Q2, and last year, and then this year, and then and I think that they were floored on the call, because our growth rate was 70-80%. Their growth rate was 30%, and the gap was closing, And so anyways, I ended up, kind of, while I transitioned out, it was very good timing because I could spend my time on that deal. And then we ended up inking a deal about a year later where we merged with them. Lucas became the CEO of the combined company, and I became the executive chairman of the, of Grupo Zap, essentially.
Great. Wow, what a interesting, great story. Just real time metric sharing to see who gets to ultimately, right, kind of command control after, right?
I knew in their mind they were like, okay, this is like a merger of like 80-20 or 75-25. And we ended up doing a deal that was close to 50-50. I gave up a few points, but I said, I'll give up these points, but I want control of the operation. And for me, that was more important than the equity because, I just felt like we were more capable of running it.
Absolutely. I mean, I think the more that you mature in different professional cycles, you at least for me, you realize that control matters so much more in many ways. Because when you have control, you know what you can do, increase the value of the equity that you own.
100%.
Right? So if you believe that you are capable and have the right determination, so that's I so totally side with you on that. And from the moment that you guys merged, how long did it take for OLX to come in?
Um, just a couple years. It was a couple years later. Let's see. We closed in 2017, 18. Like a year and a half later, we got an LOI from OLX, and
Mm,
then yeah, so it was pretty quick. We had a conversation with OLX before, but when we merged, and this is a good kind of lesson. Classifieds, real estate. There was multiple players, and you're either at the table or you're on the menu, right? So that's just market consolidation. And so I knew that eventually there would be consolidation somewhere. And so I wanted to make sure I was at the table and I wasn't kind of left out of the conversation. So it was about a year and a half when we got the term sheet, and then it took the OX deal was very complex. It was not an easy transaction, and in fact, in retrospect, we probably should have held on longer. Like there was like we were the post merger stuff was really hard. Two, you know, Corinthians and Sao Paulo, like or Palmeiras, like arch enemies, like coming together. It was definitely difficult. We made some mistakes in the process. It was complicated, but ultimately, we got it together. But and another thing that was like another reason to sell is that SoftBank came in at 2019, if you'll remember, and they're like, oh yeah, they put a bunch of like real estate folks in the same room with a bunch of other executives of top tech companies. And I remember they were like, yeah, we're going to invest a couple $100 million in real estate. And we were not the startup, like we became the incumbent, right? And it was like kind of the
mm,
1.0 classifieds business. And so we were in the process of kind of reinventing ourselves at the same time while we were doing a merger and like firing 400 people and suffering from growth. And so it couldn't have been a worse time for SoftBank to come in and be like if it was a year later, we ramped up growth the following year, but we were like flat. So like we were an unappetizing asset for a venture fund. And
mm.
so it was just really hard. And so we had a handful of conversations with potential investors, had a few kind of offers, but we decided it was time to cash our chips in. And then we ended up closing the deal with OLX.
Perfect. And then I want to switch gears then now to the we're starting in the beginning of the end here. The to then not just the creation of Latitude, but even your view on everything that's been happening with the venture market, and when we actually focus regarding in Latin America. For us, I think that have been in this game for over a decade. The situation today is phenomenal for founders. It's just so much better in many ways, and it keeps getting better. For I would say that there's so many exogenous forces changing the world of venture. If we look into the innovation cycle, the length of an innovation cycle within the asset class, it started in the 40s, and then you had the first larger firms in the 60s. Then 20 years later, you start having some other firms that came up in the 80s and the early 90s. Everyone kind of rode that wave into the 2000s, and then a bunch of people closed shop. Some folks certainly did really well and survived. You had 2, 3, 4 years of nothing, and then first round capital institutionalizes seed investing. Then you had what was Softec VC, now Uncork, Cowboy, a bunch of different firms kind of like starting to institutionalize seed. Then everyone was doing seed. There was a bunch of emerging managers. You start having crowd equity funding. Funders Club came along, AngelList came along, our crowd came along. Um, and then there was the institutionalization of pre-seed. Then you start having a bunch of influencers becoming investors, and investors wanting to be influencers. Now, this year alone, we've had over 100 hedge funds investing in venture. It seems like disciplined valuation is really a mirage at this point, unfortunately, and all returns are in the private set markets today. Right, what you got when you bought Oracle, Amazon, Apple at the IPO, or Google or Facebook, versus what you get today, it's just very different in terms of multiples. So certainly, capital follows returns. So when you combine all of that, and the fact that it's not safe anymore to invest in China because they're seem very committed to start the third world war by invading Taiwan, and lobotomizing their own entrepreneurs, start having all this money coming into LATAM. So basically, if you had to think about under that scenario that I just described, what are some of the things that you believe the founders need the most right now? What would be your general advice, right, for folks starting companies that you keep seeing that they need, in a world where terms are easier, capital is abundant, and so forth?
I think, well, first of all, it is a great moment. It's the best moment ever to start a company in Latin America, right? I mean, when I look at it, I'm often telling, I feel like that grandpa, that walked, 11 miles in the snow to get to school, when I talk about raising a $350,000, round at a two cap, right? And it wasn't
Yes.
even a cap because it was an equity round because there wasn't even safe then. So when I
Yes.
look at the juxtaposition of where we are today and that, it's just it blows my mind.
Uh,
But in terms of advice, I think that I'll give some just general statements on what I think needs to happen, and then I'll try to think about some more specific advice for founders. I think that what needs to happen and what's happening is there's this movement of the whole operator angel solo capitalist movement, and I think that's something that is really healthy. To kind of evolve the ecosystem. And the thing that I think is so important about it is, if I look back at my journey, I was really lucky and it took me a while to kind of figure this out, but I ended up bringing on incredible angel investors that were operators that had either raised and scaled a venture-backed company, raised venture and scaled a company, and
mhm.
operated a similar business or operate a similar business in another geography. So basically, if you compile kind of that knowledge that I got the first couple checks, but I had incredible insight into things that I just didn't know, and I surrounded myself with people that had been in the trenches, that had, I mean, you've got an operator background and you're an investor. That is a bit of a rarity in Latin America, and so focusing on people that can have the empathy and understand, and then also just have the insight in terms of building out your company kind of with the right early DNA, and being able to just lean on people that have been there before. So I think finding the right kind of initial capital to come in, of people that have built great startups in the past, scaled big companies, and have just have a lot of experience, was huge for me. So I guess my comment in general is we need to see more of that. We need to see more successful founders reaching back and bringing the next generation forward, which is happening in a tremendous way compared to where it was a couple of years ago. And then, so I guess my advice for founders would be, get the right people on early, right? And there's some founders that I see them really obsessed with valuation early. Of course, don't give up a ton of equity. Be thoughtful on who your partners are, but like really you set the tone early. So you know if you're bringing on someone that is not going to be a great partner for you long term, it's gonna be painful later. And so I think that's my advice would be you know focus a bit on value, not just valuation in the beginning. Again, later, maybe Series C, Series D, it's money. Just pile the money on and execute. But I really and firmly believe getting the right partners. I was very lucky to find a guy by the name of Simon Baker who had built a similar business to mine in Australia. I had Greg Waldorf, who was a CEO in residence at Excel and had scaled eHarmony from the early days and raised top tier venture, and he just knew a lot about the business of venture and the business of scaling a startup. So assembling your kind of hardcore team of early supporters that are like they're super aligned with you, like you mentioned the funeral alignment. If you can nail that in the beginning, man, you're really off to a good start. And so, but yeah, these valuations are a bit crazy. Be careful with post money safes. I don't think founders do all the dilution calculations that they should in the beginning. And, I guess that's like my quick reaction.
That's great. And as an investor, though, then how do you find paying more expensive prices now? I know that the days of, I remember when I started investing when, prices were, I remember the first time I paid an $8 million valuation for a company. I wanted a shower after. It felt lavishly high. Um, and
Yeah,
I was
man.
just shocked. There was this rule that we would think like, hey, yeah, if you're seed investing, it's always going to be single digits, and even a four sometimes would be rich depending on where the company was, and you needed to have traction. And um, you know, I'll be very honest with you. I think I'm pretty good at doing judging people and understanding the fortitude of their characters early on, but. Uh, I was more comfortable as a seed investor versus a pre-seed investor,
Yeah.
and but you don't have an alternative anymore.
Yeah. I think that my reflection there is that two of the best deals that I passed on were super expensive at the time, and they're not expensive now. You know,
Which ones?
Rappi, which you were in, I was like, this shit's expensive. And it was like the Andreessen round. I should have been smart enough to be like, oh, Andreessen's investing. I should just try to pop a check in. And it's not like Sebastian and Simon were like, hey, well, you want to invest in my company? They didn't really need me, but I had access to the deal. But I didn't have enough liquidity also, so I was not like pursuing investment opportunities at the time. And then the other deal was Loft, right? like
Hmm.
like Florian and Mate. I know those guys for a long time. I'm an investor in Canary. I almost started Loft with them, and but I had a bit of a conflict of interest. And when they came back and they're like, yeah, we're now raising at it was like a $50 million valuation. I'm like, this is a bit rich for like what's essentially a PowerPoint, and again, way too expensive, but not expensive because would have knocked it out of the park. So I mean, look, I don't invest in everything that's expensive. I try to have some discipline. First of all, I'm much less focused on investing today. I have like a small team that is, Tommy Rogio, who I work with, is doing most of the investing. I'm obviously involved, but I try to be humble about it. And when there's an inevitable founder, I love how your podcast is called Inevitable, because this is literally my favorite word to describe founders before your podcast too. And you brought it to another level, and made it the topic of the conversation with all these guests, which I just love the concept because it resonates so much with me. When I can identify
Thank
that
you.
inevitability, that to me is like, you end up paying more than you want, and most times it works out. Doesn't always work out, but that's the way venture is.
That's right. That's right. I think that's the most important thing. It's funny how you see sometimes. Yesterday, I saw a tweet from Jason Lemkin where he said, "Yeah, I looked at this company that they were struggling so much 7 years ago. There's no way I would have invested, and today they're just this very prosperous unicorn." Oftentimes, also, there's that whole, it's half of if that Woody Allen quote that says half of a success is just showing up. I say the other half is not giving up. And then,
Yeah, totally. Yeah, I mean,
so
I'm on the board of a few, like a company that has struggled a bit and like taken a while to take off. They like me on the board because I'm just like, yeah, I remember when like this happened, and then I remember when we got our ass kicked here, and like so, founders love it when you can like share the war stories because everyone is going through their own battle, and empathy is probably one of the most underrated parts of investing, right? It's just like human nature. People want to feel connected and they want to feel understood, and that's just how human nature is. So I think that's an important part of like my investing strategy is just like, hey, I like connect well with founders. I understand their pains. I help them navigate it. I'm a psychological support and a strategic support, and that's just I think is a something that people value.
that's absolutely correct. We are, reaching the top of the hour here. I know you have a hard stop. Want to be respectful of that. So there are more questions and other things that we could get into. And it's always a pleasure. I think that, you and I could be talking about this for days. I think we're very passionate about these topics, and I just appreciate your time, Brian. It's always great to see you. And
Yeah, man, happy to chat. I've got a little more time. I've got some more time. You let me know. I got another at least 30 minutes, but we don't have to go that long. But I'm open. I really enjoy chatting with you, and it's fun to see. I mean, I remember when we chatted in some hotel in San Francisco. I was at Sastra, I think, or one of these conferences, and and you're like, hey, let's have a chat. And we walked over and we sat in these couches, and like you're like, dude, I'm like getting into venture, and like and I was like, speaking of inevitability, I was like, this guy is a hustler. You just had the hustler like you had the hustler just across your chest. You didn't even need the shirt. It was just clear that I was like, this guy's going to be going after it. And sure enough, here you are almost a decade later, and no surprise to me, the career you built in venture.
thanks. I appreciate it. Also, if we can go a few more minutes, then
Yeah, yeah,
we
let's do
can
it.
take
Let's
a few.
rock.
That's great. That's great, Bill. Thanks for the kind words, and the respect is mutual, right? I've also had my moments of uh, going in the elevators or finagling into different places just to try to get things done. There's really something about discipline and not giving up, right? Like that. I think that it beats talent over and over and over again. At least when you combine both, then I think it's even better. But you know that's why I know that when folks like us get involved in certain cap tables, it can be life changing for the founders because we've been through a lot of these painful moments as well, versus just being an asset allocator, right? I and certainly oftentimes you also need that. I find that what some of these growth investors are doing, and even the hedge funds and so forth, it's good. They are eradicating laziness in the middle of the funnel. So we can be there in the earliest of the days and empath and help and train and build like this relationship, and then companies can just scale much faster. I find that positive. What is your take on the whole involvement of hedge funds in our ecosystem? I wasn't aware. Just one more point. I read this report from Goldman that there were over 100 hedge funds that did venture this year. It wasn't just Tiger, Cochu, Altimeter, and so forth.
Yeah, I mean, I think that it's uncanny the speed that some of these funds are, operating at, considering they're such large, I mean, I've seen a few deals that Tiger's been involved in. I've 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 had some good conversations with the Edition folks. In fact, I've sent them a few deals that they've looked at, and they're. I think that what's interesting about this is that there's just a massive trend of stage agnostic investing, right? And I think that it makes sense that there's this stage agnostic investing across the stack. I think it's something that is not going to go the other way. I mean, if there's a big, adjustment and there's a cycle that changes, and there's a lot of things that are unpredictable. But I think in general, I think it makes sense. And I don't maybe have the best like global perspective because I've been very wrapped up in LATAM, but I think that when you've got these growth investors or even public investors, moving into Series B and Series C and Series D, you're basically making everyone step up their game, right? And anything that results in investors moving a little bit faster, is good for founders because we all know that raising capital is a pretty big time suck for founders. And if there's a more efficient way to do that, I'm all for it. Obviously, we'll see how it all pans out in terms of, how aggressive some of these investors. I mean, there's a lot of also momentum investors out there that are just kind of like, tossing some money around. But I do think that there's some interesting science to some of these growth investors that are stepping in and going earlier. So I think overall it's a net positive. But I always have my founder hat on, right? So I'm like anything that provides more capital, faster rounds being put together. Like my investor hat is like, damn, that kind of makes it a little harder. Like it's added pressure, but ultimately, as I consider myself an ecosystem builder, even before an investor, a founder, ecosystem builder, and then investor third. And so I think that having said that, I'm all for it. But it's interesting, man. I mean, I think that the whole game is changing. I look what Andreessen is doing, blowing up the firm, expanding. There's a lot of, banter on Twitter about, I haven't been hired by Andreessen this week as a partner, and, there's just more capital in the asset class. And I do think that it's a little sad from one standpoint of public, investors, the kind of retail investor isn't getting access to some of these deals. That seems like it could be problematic because it concentrates the capital in the private markets. As an investor, I'm okay with it because I have access to deals, but I can't help but be aware that like that value creation is happening, and it's not as available to as many people. That kind of like it's kind of a bummer, but it's the condition of markets, so you can't really change it or complain.
Yeah, I agree. I feel that same pain having come from lower middle class Brazil, and now circulating in a different world in the world that I was born in, and the that will change at some point. And even if it takes like a decade, it's something that I care about deeply at one point to just bringing more democratization to the asset class. And if you have enough money, you can make that happen in a multitude of ways versus what, I think that there are incredible platforms kind of doing it just for accredited investors, but there are ways in LATAM, in the US, that's much harder because the SEC
Yeah.
has the accreditation rules. But it's possible to do it in Brazil, where the legislation is a little more flexible. The problem is
Yep.
that if you are in the early days of your franchise, um, it's it's harder because you just need capital to be in business. And then if you're at your late days of your franchise, then you're very successful. Then you already have capital, so why bother? It's
Yeah.
just really something that you kind of have to want to do. But for me, the best way of doing socialism is through capitalism and self-reliance, right? So,
Yeah. I'm,
um,
I'm
you
definitely I'm definitely a capitalist, and I think the markets will figure it out, and I think that crowdfunding is a real thing. Um, you know, right now, if I raise capital for my company, I would prioritize running a crowdfunding campaign because I want the people in the community for the products that we're building, Latitude, to have ownership over those products. And so I think that crypto will allow for that eventually. There's the tokenization of of stock is something that is in process, and yeah, over the next decade, I think it'll resolve itself, and there'll be more democratization and access. But in the meantime, it's not really happening right now, and it's probably getting worse. But sometimes it's got to get worse to get better, and there'll be a new technological shift that happens because I think that there's a business opportunity there, and that's why I'm also a capitalist.
Absolutely. Yeah. Another question that I would have for you is specifically talking about innovations in capitalism, to make our lives easier, is, as you and as you scale your operations as well, is do you find that with the rolling fund, for instance, for Latitude, that all investors kind of understand that concept, or would you say like, hey, like we can totally scale up like on top of this, or then suddenly gets to a point where you're like, you know what, like there's a reason why some things are done the traditional way, so I got to keep on doing it that way.
I think it's well understood, faster understood by founders and angel investors than it is institutional capital. Like I haven't raised institutional capital for our fund. We've got about 65 LPs. It's split between founders and GPs of top funds. So I think that in our case, I don't think it's fully understood, to be honest. But I think it's not that hard to understand. And I think that there's some limitations from the standpoint of like if you want to dip into bigger pools of capital. Like I've talked to a few larger, family offices, and we haven't focused on that, but we've got some inbounds, and I think that there's some kind of questions on how that works. It's kind of like a series of SPVs, right? So, you could have 8 quarters, and you could kill it 1 quarter, and then you'd have returns for the fund manager, and then the other 7 quarters could just go to zero. And if that was a traditional fund, then you would take the returns of the whole 8 quarters. So like that, some larger institutional capital LPs, I don't know if they love that yet, but I think it's a massive shift. I was with Avlock yesterday from AngelList. I went to their office, and I chatted with him about some of the things they're building, and I think it's a I think it's a very innovative product, and I think that it will have an important place in the ecosystem, and I think it'll continue to grow because it solves a handful of things. If you're starting a fund, no one wants to manage the back office of a fund. Like that's just no fun. That's the fun
That's
part
terrible.
is like
I've done it at one VC with the. It's just like I was the one that you know dealt with that, and it's a pain in the ass for
pain in
sure.
the ass. Yeah, so I think
Yep.
that there's definitely a place for it. I also like the fact that there's been some, shifts in terms of like, public solicitation. Like that's kind of a, I mean, I have my fund, if you go to fund.latitud, like latitude without the e.com, you can just subscribe to my fund. And I can say that on your podcast. And, I've said it, I put it on Twitter, and I got 100 grand from some, GS Beer that is an executive at a top tech company in LATAM. It just happened.
Hmm.
There's zero friction for it. Just the money appeared in my account. So that is an innovation that I think, the asset class will change. So I'm all for that. I think that there'll be other iterations, and it's not just rolling funds. But yeah, I'm bullish on it, particularly for operator angels. Kind of those solo capitalists. I think that's it's a great solution, and I may roll it, throw up an institutional fund at some point. But this is a great way, low friction way for me to start investing and
Yeah.
taking on a few LPs.
That's right. Well, I mean, it's the beauty of 506c, the rule that allows us to actually talk about these things in public. But the how then, because you have the quarters, and it's funny that you were with Avlock. I had a call with them as well a couple of days ago, talking about. They're like, oh no, it's just a matter of how you sell the vintages, right? Like, and you agree that like, hey, you're going to invest at a certain amount of time, but kind of has a little bit of that evergreen structure as well, where
Yes.
you don't have fund one, fund two, fund three, and um, it's just really difficult for anyone that has allocated capital into funds before at any level. Doesn't even have to be institutional; can be family offices or ultra high. grasp that concept, right? So
It does.
commercially, I wonder if it's I mean, operationally, it seems like it's the best tool, but then commercially, it's almost as if you'd wanted to like say, look, never talk about the quarter stuff. Just say, hey, you subscribe for a certain period of time, and the fund is an evergreen fund. But then what about the exit periods though? People don't ask like, when, because there's a moment where, hey, we stop investing from like this fund and we got to go to the other one. But then if it keeps on rolling, right? What about reserves profiles? And then, just it's a different product, right?
It's a different product. I mean, reserves, like, you can spin up another fund for follow-ons. You throw up SPVs. You can, like, so. I don't know. I'm bullish on. Well, I'm long on AngelList, big time. Like, I think AngelList is going to
So
be
so so am I. We do deals there.
super
Been a
long.
super long, perma long. That's for sure.
Yeah,
This is not a criticism. It's more of
yeah, yeah.
a
No,
debate. It's more of
it's a good question. I mean, I've listen. Not to name names. I talked to a very very important LP that is in top funds, all around, and they sniffed us out, and they're like, "We love what you're doing, but we don't invest in rolling funds." Like that's what he said. So like there's an issue there. Like, and the rationale is the one that I gave you, which it kind of makes sense. Like if you're having quarterly return on a vintage a quarter, and you crush it one quarter there, and everything else goes to shit. You can have, as a GP, you can get, you get paid on the carried interest in that quarter, and even if you extract it out, and over a 10 quarter period, that was the only quarter that actually worked. And if it had been just one fund and one permanent amount of capital pool of capital you've invested in over 2 or 3 years, and the fund didn't perform very very well, you still get paid on that vintage, right? So it looks more like an SPV than a fund, and I
yes,
think that
yes.
that is less attractive for institutional investors.
Well, because I think that, they say, oh, so we made this massive bet and put all this capital to work, but only for us to just be one quarter away, or we were in the incorrect period, right? Whereas, like, when you segment things over time, you also have a certain amount of time to make sure that things work. It doesn't keep on rolling, right? So
Right.
it's not even a I think it's a fundamental intellectual question, but I know that there are rolling funds today based on the calls I've had with them. They're deploying 10 million a month. This is no joke, man. Like literally one rolling fund with $10 million a month. It's $120 million a year, right? But
Yeah, it's like equivalent to like a $350 million fund or something, right?
exactly. So, it's tough to question that there isn't product market fit. There's a massive line of people that wanted to launch this, and but the pools of capital that fuel that are usually individuals that have a startup experience. They're not
Yes.
even institutional investors. They're just not even family offices because just
Yeah.
so it's the yeah.
It's an education thing. It's an education thing, and they'll always it's not always gonna be a perfect fit for everybody. But like I'm loving having my rolling fund. Like it's so easy. I'm a happy customer. So I would like to see more rolling fund activity. I've got to stop and do a little assessment of like whether it makes sense. Like from a tax perspective, like the structure we have. LATAM having LPs from Latin America. Maybe you can set aside some time and give me some advice there because you
Happy to
probably know
help.
that better than I do.
Yeah, I'm happy to help. Not only that, but just connect with the people that have been doing this for a long time. So happy to help there.
Cool.
And yeah, I guess there's always these like last questions I always ask out of curiosity. I
Sure.
find them
Go for
interesting,
it.
which but the one I want to ask you was, what's an ideal morning routine for you, if you have one, right? Like that's like
Yeah, I do. I do have I've kind of been so about a month and a half ago. I like felt like I was kind of getting a little out of shape and not taking care of myself enough. So I wrote a document. I don't have it with me here, but where I basically just like made this kind of like the best version of Brian Requarth. Like, what does it look like? And it was broken into three categories. One was like health, the other one was business, and the other one was family. And I like almost made OKRs for each, three areas of my life. And one of them was just a shift in what I do in terms of my routine. So I try to get a good amount of sleep. That's super important to me. Like, and I'm, tracking on my Garmin here. Like, like I had 7.5 hours sleep last night. I'm pretty much fully charged. I love 8, but 7.5 is great. And, I get up, I try to like not make looking at my phone the first thing I do. It's taken a long time for me to do that, but I usually put my phone not next to my dresser on my, next to my bed. I put it somewhere where I have to like get up. And so that means I kind of wake up and I'm like, okay, I'm aware that I'm waking up and I'm like taking a few minutes at least. And then my routine usually starts. I usually spend the first like 30 minutes of my day firing off responses to WhatsApp, Slack, and email. Usually I just grind out like probably 15 or 20, 30 messages in a short amount of time. Then I make myself a cup of coffee and have breakfast with my kids. And like that's like a sacred kind of 30 minutes in the morning where I get them up and my wife and I are kind of hanging out and we get them off to school and then I'm kind of after my day I've tried to set aside my calendar so certain days of the week I have no Zoom or very little Zoom Wednesdays, so call it working Wednesdays. I also block off time on my calendar now to think about stuff and just like not have stuff to do. And I feel like it's some of the most productive time I have. And I've got usually my team meetings, with my team on most days where we have like our kind of, sync up and, my co-founders, we connect. So it's pretty consistent. I try to do my 4 o'clock coffee with my wife, where we kind of have a sync up with, the two of us. We either go on a walk or we just like sit in my office and she's Colombian, so there's got to be some coffee. And man, like those are some of the routines that I have in my life. And it's funny because I describe this and I'm like, wow, I sound kind of like a balanced person where I'm just not. So, but I'm a work in progress and I'm much more balanced than I was 5 or 10 years ago.
Amazing. Well, Brian, it was such a pleasure. I always appreciate spending time with you and learning from you. So thank you so much for being on the Inevitable podcast. And we're excited to collaborate and continue to build the ecosystem for the next decades to come.
100%, man. Great to be on the show and excited to see what we can build together.
Awesome.